Hello and welcome everyone to the Bird Nest. Today we'll be talking a little bit more about the merge. We will be talking about monetary policy, how that will all change, how you can trade the merge, and how some of the bigger players are actually trading leading up to the merge. And we will also answer some of those very talked about or very asked questions, the most asked questions about the merge. We will cover those here. So don't miss out. All right, let's get started. First, I want to cover kind of the top five misconceptions about the Ethereum upgrade or the merge. So the Cointelegraph has a pretty decent article here. I just want to dive a little deeper. So misconception number one, gas fees will reduce. No. So the merge, what actually happens is you're going to proof of stake. Throughput will increase. So the time each block takes will be a set 12 seconds versus now it is an average 13 seconds. So it will be a little faster and a little cheaper, but it will be negligible. So no, not exactly. So here they write Ethereum's upgrades reduces Ethereum's infamous gas fees. It doesn't. It's one of the biggest misconception. It's a change of consensus mechanism that will transition Ethereum from proof of work to proof of stake. However, later, they're going to do with rollups, sharding, and so on and so forth. Ethereum will become cheaper and faster, but that comes at a later stage. Now, it is important to understand we need the merge so that we can implement things like sharding, rollups, and so on. Now, something else to consider is that all of these things are worked on simultaneously post merge, so you don't actually need to do it sequentially. Sharding and all that can come sooner than we expect, so it's something to keep an eye out for. Misconception number two, Ethereum transactions will be faster after the merge. So again, it's what I mentioned. As Beacon Chain allows validators to publish a block every 12 seconds, mainnet it's roughly 13.3. So it's a tiny bit faster, again, negligible, but it is consistent because right now it's an average block time, whereas with proof of stake, it's going to be a consistent block time. So they believe transitioning to proof of stake will enable a 10% increase in block production, a slight improvement. So again, really negligible in terms of speed, but it is something to mention. So next, the merge will result in downtime for ETH. I don't know if anyone has actually heard this, but if you saw my last video on the merge, you should definitely check it out. I talk about how the merge is actually kind of like a moving car, and they're changing the engine without stopping the car. They're going from a combustion engine to an electric engine as the car continues moving. So, no, you are not stopping the blockchain. It is all going to continue, and you will not know the difference. Finally, investors will be able to withdraw staked ETH. Again, it's a misconception. This will come at a later stage with the Shanghai upgrade. And you will be able to claim it once you have the Shanghai upgrade. It can be, or it's expected to take between 6 and 12 months. That depends on other upgrades as well, because what they try to do in the developer community is when they have a lot of updates, they bulk them together instead of sending a new update every month. They bulk them together in batches. So even if withdrawals are ready, they might wait a couple more months for something else to be ready as well. So yes, you cannot withdraw your ETH yet, and validators will be able to withdraw ETH rewards till the Shanghai upgrade. Apparently, this is a misconception. So while staked ETH remains blocked for investors until withdrawals are resumed following the Shanghai upgrade, validators will have immediate access to the fee rewards and maximum extractable value MEV earned during block proposals from the execution layer of Ethereum mainnet. So validators can dump on you, even though you cannot withdraw your staked ETH. Something to keep an eye on. But let's move on to the next subject, validators. Fun. Right now, that is the biggest issue going into the merge. We got Lido with 30%, Coinbase with 13, Kraken with 8, Binance with 5%. The top validators have a lot of the voting power. Now, you need 2/3 to kind of play with voting power and kind of cause any serious damage or any problems. So they are not quite at 2/3 yet in the top 5, but they're at right around 55%, which is definitely something scary. So you definitely don't want to continue see this. And in the ETH community, there is definitely a push to kind of get more validators on board and reduce the voting power that people like Lido, Coinbase, and Kraken currently have. So it is something of concern. It's something of concern with the recent Thorchain news and everything that has happened there. If you don't know what happened with Thorchain, go check out that video. I already made it. So definitely check that out. Maybe we'll add it into the show notes because that has definitely affected Ethereum. And so if suddenly Ethereum decides to go after Coinbase or Kraken for their validators, then that's going to be a huge issue for the chain. We can actually look at more information in terms of validators here. We can see kind of the validators over time. We can see how Lido has been growing ridiculously. And now I am getting rugged by my computer. All good. Let's continue. I wanted to mention how it is very important that if you decide to stake your Ethereum, you look for smaller pools. Rocket Pool is a great solution, Anchor as well. Those are other smaller validators that do good work with Ethereum. So here we can see the top validators, and we can see how Lido has really just completely taken over 30% of the voting power. Even as deposits and validators have grown, really the biggest validators continue to take most of that power. That is validators, and we can see total Ethereum deposits is right around 13 million ETH. That is a huge number of Ethereum that is currently locked up and staked. Next, Ultrasound Money, and this is what I want to get into with the video, how the monetary climate will change, or how the whole system will change for Ethereum. At the moment, Ethereum is inflationary at 4%. However, with the Ethereum merge, this changes. If we look at the overall history, Ethereum has been generally inflationary. With the upgrade of EIP 1559, this popular update that famously burns Ethereum gas, as we can see over here, burn, Ethereum became much less inflationary because of this burn. Now, with the Ethereum merge, it seems that this will change. So if I click over here at Simulate Merge, we can see that Ethereum becomes deflationary, hence the meme Ultrasound Money. This is quite interesting because it's the equivalent of 3 Bitcoin halvings. So as we know, or if you don't know, Bitcoin halvings are every 4 years, and then the total amount of Bitcoin that is distributed is halved. So if your reward for mining Bitcoin used to be 1 Bitcoin, now you get 0.5 Bitcoin after each halving. That's what it's called, and it's as if that happened 3 times. So there's a huge reduce in inflation. Now, this does depend on a lot of things. Again, we can play with that over here. So if right now, say there's 13 million ETH staked and it remains, then there's going to be right around 4.6% inflation per year. And the burn rate, we can say the burn rate is similar. So that would mean that Ethereum would be decreasing. Now we can say more people are going to be staking. So then the inflation is going to be higher, but maybe the burn rate is going lower. So then there's going to be more inflation and less people are using it. So maybe Ethereum won't become quite as deflationary as people expect. And we can see that really clearly down here with the ETH supply, production, and so on. We can see that it's expected that at the ETH merge, it's going to be the peak of the supply. Post merge, it will go down in terms of total Ethereum circulating. So this depends on two things, of course. It depends on how much Ethereum is being burnt, and we can kind of play with this here on Ultrasound.money. So the amount of GUE is the gas prices. So right now, gas prices are actually pretty cheap. So if I set it to around 20 GUE, 23 GUE, which is the average right now when people are bear market hibernating and don't care. And we can say that a lot more people are going to stake their Ethereum after the merge because it went well, say 20 million ETH. We can see that it's mostly going to be flat. It is slightly deflationary, but really the total circulating supply of Ethereum is really going to stay flat. And it's not really going to become this ultrasound money. Now, if we for some reason say that gas fees go up because there's a lot of transactions, a lot of usage, and gas fees are at an average of maybe 95 GUE a day, then we can see how this curve starts to go down as there's more burn in Ethereum and then thus making it deflationary. So it's really important to understand these mechanics because moving forward, Ethereum will most likely become deflationary as there's more use and not as much inflation or minting of Ethereum, thus ultrasound money meme. Now, what should you care about? How should you trade the merge? Because as Vitalik has said, it's confirmed on block number 5875 and a bunch of zeros, we will have the Ethereum merge roughly September 15th. So it's that date time around September 15th because it is at block height. It might be on the 14th, might be on the 16th, depends a little bit on blocks, but it's set, it's happening. So what can you do? I actually wrote this thread earlier last week about what are the whales doing and how are they preparing for the merge. So as we can see, volume has been going down on Ethereum. However, open interest has been skyrocketing. People are really leveraging this play. Not only open interest, but estimated leverage has also been going up pretty much since the beginning of the year. So what does that mean for the merge? It means most likely because funding rates are so positive that people are spot long and futures short. Or actually, because funding rates are positive, there's enough people actually futures long because they want to leverage long into the merge. Now, actually, Arthur Hayes wrote a very comprehensive play on how Ethereum is being played and how everything is happening around this Ethereum merge play. But actually, Will Clemente narrowed it down. TLDR was pretty good here. So I won't be reading this 15-minute article that Arthur Hayes wrote. I will be linking it in the description. It's a great read, so definitely check that out. But as Will said, participants are short quarterlies because they are hedging the failure of the merge or being delta neutral to capture forked coins. These participants are long spot short futures. Conversely, the delta neutral market makers are short spot and long futures. So everyone is hedging into the merge, but there seems to be more people hedging to the downside. So because there are so many people hedging to the downside, you get this backwardation. So in the event of a successful merge, short quarterly positions are then going to be closed by people hedging the merge and forked coin capturers. And the market makers on the other side are going to need to cover their back by buying back in spot Ethereum. Thus, it's going to push the futures curve back from backwardations and most likely cause a form of short squeeze on Ethereum because people are going to be forced to buy Ethereum. So because everyone is hedging so much into the merge, then we're going to be expecting a lot of volatility the day of and around the merge. So what can you do? If you're a small player, I would mostly just be sitting in spot Ethereum, capture the forks, sell the forks, but mostly just sit in spot Ethereum. If you have the options to hedge, you can do something like what these big players are doing, where you can short perpetuals because, as we saw over here, funding rates are so positive that shorts are getting paid. So you can, for example, spot long Ethereum and futures short Ethereum. So you get paid to short Ethereum, um, and thus, because you get paid, you're kind of hedging your play. And whenever it happens, or whenever something happens around the merge, you can be safe because you hedged your position in case Ethereum dumps. But if it decides to go up, you use your stop loss and you can be ready. I did cover all of this in the Burb Nest. So if you guys have more questions on that, use that link somewhere below. You can join the Discord. I answer all of this in there. There's a lot happening leading up to the merge, and it's going to be very, very interesting to keep up with all of this. So this is the second video. If you missed the last one, definitely check that out because there's a lot more information on the merge. If you liked it, like, subscribe, leave a comment. I hope you guys enjoyed this. And I'll catch you in the next one. Peace.